Hello, friends and subscribers. Welcome back to another episode of Readings in Impact Investing with me, Daniel Rosehill. This is a new podcast with an accompanying YouTube channel, and the aim is to take important source material in the world of impact investing and make it available to a wider audience, or just make it more convenient to access through narrating it in audio format, with the focus on reports, but not just reports, also going into terminology, because there is so much terminology in the space, and that is indeed what today's episode is going to be. I just want to make a quick note at the outset to say that there are some changes I'm setting in the process essentially of setting this up as a project for 2024. We got our hosting set up yesterday on Spreaker. That's our podcast hosting. And today I picked up a domain name, which is readingsiниmpact.org. So .org, readingsiниmpact.org. Currently, it just redirects to the Spreaker podcast. I might develop an actual, proper website for this in time. But for the moment, that should make it easier for folks to access. And this podcast is available through Google Podcasts, Apple Podcasts, and other podcasting apps. So today I want to take a look at I'm going to read a page from the MacArthur Foundation's website about catalytic capital, because when we're talking about capital mobilization in so-called EMDEs, emerging markets and developing economies, catalytic capital comes up so frequently as a topic. So this webpage not only defines catalytic capital, but it also gives some introduction to the work of the Catalytic Capital Consortium, or C3. So I figured that this would provide a bit more background as to where these efforts stand. So without further ado, catalytic capital is defined as investment capital that is patient, risk-tolerant, concessionary, and flexible. And it's an essential tool to support impact-driven enterprises and organizations that lack access to capital on suitable terms through the conventional marketplace. And again, I'll just repeat this for emphasis. Catalytic capital is investment capital that is patient, risk-tolerant, concessionary, and flexible. And it's an essential tool to support impact-driven enterprises and organizations that lack access to capital on suitable terms through the conventional marketplaces. The aim of catalytic capital is to unlock impact and additional investment that would not otherwise be possible, thereby strengthening communities, expanding opportunity and economic growth, and fueling innovation that advances the well-being of people and the planet, while laying the groundwork for mainstream investors to participate in transformative investments. So basically, it's a capital being provided on terms that are not normal for capital markets. In other words, that loan capital is granted on terms that are favorable to the lender. It's specifically granting it on terms that suit the borrower, essentially. And the reason that it's called catalytic capital is that this initial tranche of capital can serve as a catalyst for more conventional investors loaning on more conventional terms to join in the market. So it's kind of, if you want to use an analogy, you could think of it perhaps as the spark that starts the fire going in these communities that really, really need it. To make substantial progress towards a more just, inclusive and resilient world, we need more catalytic capital to flow. The Catalytic Capital Consortium, or C3, aims to demonstrate the power of this form of investment to extend and deepen the reach of the impact investing field, helping to address the annual funding shortfall of $2.5 trillion in developing countries that is hindering the world from reaching the UN Sustainable Development Goals, or SDGs. The initiative is helping a select group of outstanding diverse funds address some of the world's most pressing challenges, while also building knowledge, awareness, and use of catalytic capital globally. To implement the C3 initiative, we selected a set of funds and organizations to receive impact investments totaling over $100 million. Collectively, this portfolio is intended to showcase powerful examples of catalytic capital across diverse sectors and geographies. It is intended to reduce risk, build track records, and increase the scale of promising fund managers. These investments to advance the C3 initiative set the stage for other investors, both impact-oriented and conventional, to participate and fuel additional growth. The Rockefeller Foundation and Omidyar Network have joined MacArthur as C3 strategic partners, each providing a portion of the initiative's pooled grant funding. The investments related to C3 are funded solely by MacArthur. MacArthur is a leader among local foundations, government agencies, research institutions, non-profit community organisations and private sector actors that mobilise collective assets to address pressing challenges or pursue timely opportunities. We work in close collaboration with our partners to identify the problems and support the solutions that community members want to address. Field partnerships. As part of this initiative, we are making investments totaling over $100 million that demonstrate a powerful use of catalytic capital across diverse sectors and geographies. As collaboration is essential to the successful use of catalytic capital, we use the term field partnership to describe the efforts that we support with our investments. Our current field partnerships include Adjuvant Growth Health Technology Fund, a $5 million program related equity investment to help address overlooked public health challenges by financing the development of life-saving technology products for lower and lower middle income countries. Alive Ventures, a $5 million equity investment to Acumen Latin America Early Growth Fund LP, a private equity impact fund managed by Acumen LATAM Impact Ventures, which invests in companies that tackle inequality in Colombia, Peru, and Central America, with a focus on agribusiness, education, access to formal jobs, and renewable energy. Finally, I'm just skipping through a few of them just because I want to have the focus on catalytic capital and not just these partnerships. The Zero Gap, up to $15 million in equity investment to expand and accelerate the Rockefeller Foundation's Zero Gap initiative, which aims to tap into mainstream markets and investors, scaling up investments into promising new financial vehicles that help to fund the closing gap. I'm also going to read the Why Catalytic Capital page from the website of the Catalytic Capital Consortium. For those who are interested in learning more about the work of the C3, I think that's probably done because the Catalytic Capital Consortium is a bit of a tongue twister. Their website is catalyticcapitalconsortium.org, and they have some information there about Catalytic Capital and about their partners and projects. So, what is catalytic capital? Catalytic capital, as defined in the report Catalytic Capital Unlocking More Investment and Impact, is debt, equity, guarantees, and other investments that accept disproportionate risk and or concessionary returns relative to a conventional investment in order to generate positive impact and enable third-party investment that otherwise would not be possible. So I think both halves of that definition are important, but specifically the last part, that they enable third-party investment that otherwise would not be possible. And again, that's why it's called catalytic, to the best of my knowledge. Catalytic capital cuts across different asset classes and diverse types of providers, including private and community foundations, high net worth individuals and family offices, impact investment wholesalers, corporations and corporate foundations, and finally government and development finance institutions, or so-called DFIs. How does catalytic capital drive progress? Catalytic capital can play a number of distinct roles to seed, scale and sustain a wide range of impact funds, enterprises and initiatives. Because it enables impact that would not otherwise be possible, it is a critical resource for addressing urgent global challenges related to climate, health, poverty and justice. And they give 3 examples: seeding, scaling and sustaining. They have full web pages on each, but I'm just going to read the summary and then we'll wrap up this episode. Catalytic capital can provide support to enterprises and intermediaries pioneering new models that have not yet demonstrated the commercial viability and track record required to attract conventional capital. By enabling these impact pioneers to test, refine, and ultimately prove out their business models, catalytic capital helps to build a future pipeline of investable impact opportunities for conventional investors. Scaling. Catalytic capital can help impact enterprises and intermediaries to scale and expand their business into new situations, population segments, and geographies. In many cases, such investments are also intentionally structured and deployed in ways that de-risk and mobilize additional investment from conventional investors. And I think in a future episode, I'll talk about de-risking and examples of de-risking in this context. Finally, we have sustaining. Catalytic Capital can help to sustain impact enterprises and intermediaries that require subsidy on an ongoing basis in order to maintain a focus on serving hard-to-reach beneficiaries or otherwise operate a business model that cannot achieve full commercial viability. Again, there's a lot more information on the Catalytic Capital Consortium's website. I might do future readings from that website, but I think that's enough of an introduction to exactly what it is. Thanks for listening to this episode. If for whatever reason you would like to get in touch, perhaps to recommend some reading material for this podcast, do feel free to drop me an email. It's public@danielrosehill.com. Rosehill is how you spell my second name. Thanks for listening. And of course, as this is December 31st, let me wish everyone a very, very happy new year and much success in 2024.